Bill, I just found a sweet dividend stock with a 25% yield. Nice. What's the stock price done? Well, I am down 42% on the price, but down 42%? Warren, brah, you need to watch this video on the 7 highest return monthly dividend stocks. One of the stocks pays a 7% yield and has returned 138% over the last 5 years. Sweet. Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel, and yes, today we are talking about the highest return monthly dividend stocks. Nation, a few weeks ago I showed you the 7 monthly dividend stocks I use for constant cash flow, and it immediately jumped to the 3rd most popular video on the channel with almost 500,000 views. We've talked about the highest yielding dividend stocks and the safest, so I know you love getting those dividend checks as much as I do. But there is an extremely important piece missing. You see, the highest yielding stock might not be the best for your portfolio. In fact, you could actually lose money if the stock price falls or if they cut that dividend. Investors get dollar signs in their eyes for those double-digit yields, but the real profit is in that total return. The stocks that make you the most in dividends and the price. In fact, this is so important for dividend investing, I wanted to add this video to our Ultimate Stock Picker series. In this video, I'm going to show you why total return is so much more important than just dividend yield. I'll take you step by step to find the best monthly dividend stocks with those highest returns. Then I'm going to count down through the 7 top dividend stocks by return and one that has more than doubled your money in the last 5 years. The video is part of a 4-part series in partnership with The Motley Fool to help you get started investing. I'll be putting all 4 videos into a special playlist on the channel called The Ultimate Guide to Start Investing. And as a bonus, I'm going to help you get started with a free report, the top 5 stocks in my own portfolio. These are the 5 biggest stock positions I'm holding right now, stocks to benefit from the biggest trends over the next decade. It's an exclusive report only available through the link that I'll leave in the video description below. I won't be sharing these in any videos, so click through and get your free report. We're getting started on that countdown for the best monthly dividend stocks, but first, I want to put this to a test and see where the community is at. Look in your portfolio and find the stock with the highest dividend yield. Then find the price return over the last 5 years. So for example, for my shares of STAG, that's ticker STAG, the shares pay a dividend yield of 4.2% annually. But there, if I click on that 5-year chart, I can see the share price has grown by 47% over the last 5 years, adding to that annual return. So scroll down then and let me know in the comments below what's your highest yielding dividend stock and what is the price return over the last 5 years. Our first monthly dividend stock is one of those I use to pay my rent every single month. Prospect Capital, ticker PSEC, with a 9.4% dividend yield. And now, before I show you why I like Prospect, all you out there in the nation know I'm a numbers nerd, so I gotta get a little technical here and show you how I'm calculating that total return. Now, you could just eyeball the stock chart here, so looking at the share price over the last 5 years, but that really doesn't show you the true return, including those dividends. So what I want to do here is click over to historical data. Then we're going to change this time frame to the last 5 years, and then over here to just show monthly data to make the table a little bit more manageable, and click apply. Now we see the share price for each month and the dividends, and what you want to pay attention to is this column labeled adjusted close. That's going to be the stock price adjusted for any dividends or splits. So it's giving you the stock price minus those dividends that investors actually collected. And if we scroll all the way down here through those last 5 years and find the adjusted price, so 5 years ago the shares of Prospect Capital were priced at $7.82 a share. But if you held them over that time, you're going to have collected all those dividends. So it's like you really only paid $4.38 a share for those. So then to find the actual total return here, you take the current price, that's $7.85 a share, and divide that by that adjusted price, the $4.38 each, for a 79% return over the 5 years. Now just one more step here to see how much this is per year, and here's where it gets a little nerdy. Math rules, yo! So you've got that 5-year return. To find the annualized return, you go over here to this little X with the Y above it. That's your number with an exponent. Tap that and then go to 0.2 because each year is a fifth or 20% of that 5-year period. And we get a 12.3% annualized return for Prospect Capital. Now, if you haven't clicked out and you're not sleeping, then you're my kind of people, but I promise it's not as hard as it looks. Really, you can just look at that total 5-year return to really compare your dividend stocks without doing the whole exponent fancy annualized stuff. But I wanted to give you the tools to do this on your own to find that true annualized return. Anyway, what were we talking about? Yeah, Prospect Capital is a business development corporation, so it makes loans and invests in mid-sized companies and has paid dividends for more than 16 years. The company manages a $5.7 billion portfolio of 122 investments in companies across 39 industries and earns a 9.9% yield on its portfolio. Now, that's more than enough to cover the stock's dividend yield and has helped it produce that double-digit return each year. In fact, Prospect has returned a cumulative $18.60 a share in dividends for more than $3.3 billion returned since that 2004 IPO, and the payout just keeps climbing. Because that's really the purpose of these BDCs, is to act as a bank and an investor to mid-sized companies, manage those assets, and then return 90% of those earnings as cash flow to you as the investor. But you see, if you were just eyeballing the share price for Prospect over those 5 years, it doesn't look like that much of a return. And you would have missed out because you didn't have those math powers. Second on our monthly dividends list is another favorite of mine, Stag Industrial, ticker STAG, with its 4.2% dividend yield. Now, unlike Prospect Capital, Stag doesn't pay a huge monthly dividend at a yield of just over 4%, but what it lacks in cash flow, it definitely makes up in price return. Shares of Stag have produced a total return of 13.7% annualized over the last 5 years, and there's good reason to believe it can keep on producing that. Stag owns 450 buildings in 38 states and 91 million rentable square feet in that industrial warehouse space. The rise of e-commerce and online shopping has destroyed the retail property market, but all those online orders need to be stored somewhere, and that's meant a boom in warehouse demand. In fact, 43% of Stag's property portfolio is involved in e-commerce activity. No tenant accounts for more than 2% of the company's total rent revenue, so the odds of a tenant failure vacating lots of space is basically zero. Shares trade for just 13 times funds from operations, so a solid value play here, and the company only has $300 million in debt maturities over this year and next. And now here is a great time to talk about why that total return is just as important as the high dividend yield when you're looking at these dividend stocks. Nation, I get it. We all love seeing those double-digit dividend yields. Well, you see that 15% dividend yield and it's like hypnotizing you. You must buy this stock. But then you buy it, and the share price falls so much that it basically wipes out all your return. Investors in San Juan Basin Trust, ticker SJT, actually lost 1/3% annually over the last 5 years, and that's including that 15% dividend yield. So total return is important, if nothing else, just to know what you're getting in a stock, but also to get that balance between growth and dividends for your portfolio. Now, a lot of the stocks on our list might not pay the highest monthly dividends, but they produce a great return and grows your portfolio, so you're going to be collecting more dividends in the future. You get to grow your nest egg and get a higher cash flow, and I don't know what's better than that. Except maybe, well, it's a family channel, so we won't go there. Counting down here, 5 on our monthly dividend list is Global Water Resources, ticker GWRS, and I was actually a little surprised at this one. Global Water is a monthly dividend stock, but it only pays a 1.8% dividend yield, but it got on our list for its 16.5% total annual return over the last 5 years. A perfect example of a lower yield stock that can really pay off. The company is a water resource manager that owns and operates water, wastewater, and recycled water utilities. So it's a water utility company. And if that doesn't sound like a growth industry, the company operates in Phoenix, Arizona, which, if you've ever been to Phoenix, you know that water is like gold there. Global Water has grown its dividend by 22% over the last 5 years, so some growth there and solid price returns as well. This next one's a higher dividend though, Stellus Capital Investment Corporation, ticker SCM, with an 8.06% dividend yield. And Stellus is another business development corporation, and you see a lot of these as well as real estate companies and MLPs paying those monthly dividends because they're set up so well for that cash flow. In fact, including that solid dividend, the shares here have produced a 16.7% annual return over the last 5 years. Stellus manages $1.7 billion in assets with more than 270 loans since 2004 and has paid a total of $11.08 in dividends. The company specializes in those liens and that debt financing to mid-sized companies with $5 to $50 million in EBITDA earnings. And this is what you like to see in a BDC's portfolio, spread out across as many industries and geographically as possible. So failure in a specific industry or a specific state just isn't going to bankrupt the company. Only 7% of the company's loans is on those fixed rate terms, which is good to see as we see how inflation and interest rates are heading higher. Most of the loans are first lien status, so fairly safe here. And another thing you want to watch for in these business development companies is that weighted average yield on the loans. Now that's the average interest rate the company is collecting on its loans. We see here all of these are above the company's dividend yield, which is an important sign as a sign of dividend sustainability. We've still got 3 more monthly dividend stocks to highlight, including my favorite one that has produced a 138% return over the last 5 years. But all you out there in the nation know I'm not about just to drop a few stock picks in your lap. I want to give you the tools to do this yourself. So here I want to give you 3 things to watch for when picking your dividend stocks. First, as we've talked about, you want to think about that total return instead of just focusing on the dividend yield. Now, this isn't a hard, fast rule, and you can balance your return and dividends depending on your preference. If you want that higher immediate cash flow, even if the stock might produce a little bit lower return over the long term, then go for it. You're the squirrel and it's your world. Now, even if you do want that higher yield though, still go through the steps to check out that stock's total return. So just so you know what to expect. Second here, and so important, is checking the stock's dividend sustainability through either the payout ratio or distribution coverage. Now, this is going to tell you how likely it is that the company can keep paying that dividend or even grow it over time. The payout ratio is the percentage of a company's earnings it pays out to cover that dividend. So if a company is paying out most of its earnings, it might not be holding enough back to grow the business or just to stay competitive against its peers. And that could eventually affect the dividend. And you can find the payout ratio by taking the annual dividend amount. For example, we see here that AT&T pays an annual dividend of $2.08 per share, then divide that by the earnings per share reported over the last 4 quarters. So AT&T reported $3.20 in earnings, which means it's paying out 65% of its earnings for that dividend. And to get an idea if that payout ratio is dangerously high or not, like it was in AT&T's case, you compare it with the dividend stocks in that industry or with what the company has paid out in the past. Now, besides avoiding those risky dividends, this is also a great way to find the dividend stocks that might actually be able to increase their payout if the payout ratio is low enough that the company can boost that dividend and still provide for growth. Now, that's going to be for dividend stocks set up as corporations because MLPs and business development corporations are structured a little differently. Here you want to use what's called the distribution coverage ratio. But the idea here is basically the same. It's just the percentage of the cash flow the company is paying out that covers that dividend, but it's measured a little differently. Now, most of these companies, the BDCs, the REITs, and the MLPs, where you'll need to compare this ratio, they're going to calculate it for you and show you in their financial reports. Third here, before we get back to that monthly dividend list, is looking for the stocks with increasing payments. Now, if you've used these other 2 factors to look for your stocks, you've probably already got a stock increasing its dividend payout as well, but it's always good to double check this. Most investing apps or sites are going to show you the dividend history of a stock, or the company's investor relations page is going to show it. So just scroll through here to see if the company has consistently raised its payout amount. The Gladstone Land Corporation, ticker LAND, is another one of these with a smaller dividend yield but a strong total return. The company is a farmland and real estate trust with 137 farms and over 100,000 total acres in 13 states. The land is leased back to the farmers on a triple net basis, which means the tenant pays all the costs and the trust just collects those checks. Now, maybe I'm a little biased as an old Iowa boy, but farmland is a great investment. Even as the world's population and food demand has boomed, farmable land per capita has shrunk from 0.8 acres per person in 1980 to almost half that amount, just half an acre per person last year. We're trying to grow more food on less land. It's driven crop prices higher, and the increased farmland index has produced an annualized 12.3% return over the last 2 decades. Now, for its part, Gladstone Land has produced a 17.3% annualized return in the last 5 years, including that 2.4% dividend yield. Now, this SPDR Barclays Convertible Securities ETF, ticker CWB, isn't a dividend stock at all, but it does pay monthly, and I'm glad it made the list. The fund holds more than 300 convertible bonds, which is debt borrowed by the companies that can be converted into shares of stock. It's a great hybrid investment with the safety and the interest yield on bonds, but also some of that upside potential for return. And these are bonds of strong companies, large companies like Wells Fargo, Bank of America, and Tesla. So having that risk spread out across hundreds of companies and having that safety of bonds makes this a great addition to our dividend list. Shares of CWB pay a 2.2% yield, but because of that convertible option, have produced an 18.5% annualized return over the last 5 years. And our top monthly dividend stock, Gladstone Capital, ticker GLAD, with its 7.6% dividend yield. Gladstone is another business development corporation, but managed really well to produce that strong return. The effective yield on the portfolio is 10.8%, which is well above the dividend yield and means the company has more than enough left over to invest in growth and grow its share price. The portfolio is well diversified across 18 industries, with nearly half the loans as that first lien status, and an 8.4% of the portfolio in equity ownership for that upside return. Shares here have produced an astonishing 19% annually over the last 5 years. That's 138% total return over that period. Don't forget to get your free report and see the top 5 stocks in my portfolio, or click on the video to the right for the first in our Get Started series and the 4 best investments for beginners. Join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.